All right. Good evening, everyone, and welcome to the fifth episode of AMA with DNK. And today's 1st August, the beginning of new month. And what a day to start a topic like pitching and pitch decks. So let me wait for a few seconds before people start joining in. As we said, this is a YouTube exclusive, and I hope a lot more people join in so that we are able to talk and discuss in detail at length about pitching and pitch decks. And as I said, I am particularly very excited to talk about all about it. So this episode is called everything about pitching and pitch decks. I am particularly very excited because I know that uh, if you go to internet and search for the term pitching, pitch decks and funding, these are the hottest subjects or hottest topics, and rather most cluttered topics around internet, right? So I'm sure we're going to talk a lot on these topics. Of course, as we know the format. I have a few questions prepared already. I'll try and answer around those questions at length, and then of course post that we'll pick up the questions from the audience. So if you have joined in, if you have any questions, if you have any queries, questions during the session, or if you have any questions around pitching and pitch decks, feel free to post them into the comment section. Okay. And let me also quickly check if we are live on other social media platforms, basically on YouTube, and then we will begin. Yes. So we are live there. Okay. Super. So, good evening, and my name is Dilnawaz. I am the founder of a company called Codesign Labs and Power Deck. And today, as I said, we're going to talk at length about uh, pitching and pitch decks. Thank you so much for joining on AMA with DNK episode number 5. I am very excited. Okay. So, as I said, I have almost like a decade long experience into startup designing, technology, business, ecosystem space, and it's been a couple of years, and I've been very active player and a member of startup ecosystem, and I do this on a Saturday evening just to kind of come on online, talk to all of you guys who are out there, and I try and answer questions in general around which I kind of get asked very often. Uh, and of course, I don't want to. The reason why we have a specific format for the section is because I don't want it to look like just another random AMA where people are asking random questions. We try and revolve the questions around a topic, and that's how I prepared, and that's how I like to roll. Okay, so as all of you know, that today we're going to talk about pitching and pitch decks. So before I begin today's session, I have a small presentation to show you guys, which I hope uh, will kind of excite you, or will kind of will give you an idea who I am much more into detail. So as you know, I run a company called Power Deck, and one of the reasons why I call myself, or at least I call myself as an authority on the subject on pitching and fundraising, is because my company Power Deck, we work full time or on project basis with a lot of multiple incubators across the country. We work with roughly more than 20 incubators, top national level, top class incubators. And we also, uh, give me a second. Yes. Uh, so we conduct a lot of workshops, we conduct a lot of programs, we conduct a lot of training sessions. We have done it with Road to GES, we have done with NASCOM, we have done with IIM Ahmedabad, CII, we have done with Nexus, American Center, and then multiple other programs in different capacity, as a trainer, as a coach, as a mentor. One of the biggest reasons why I wanted to talk about this thing and wanted to give you a glimpse of this, because I wanted to convey this information very clearly, that I am one of the authorities on the subject, and the kind of information I have learned through my entire career of 10 years in terms of specifically helping startups and making pitch decks. My full-time job is to help startups in making pitch decks. I think it enables me to give you more clarity, and that's why I said we are keeping a very specific theme around these AMAs. Okay. So, as I've said, today's topic is called pitching and pitch decks. We are practically going to cover three broad areas, and let me remove the banners before we jump into. Uh, yep. Yep, they're gone. Of course, if you do not follow me on Instagram, I would love that you can go and follow me on Instagram and other social media platforms, and go and share this channel with your friends, so that we are also able to give them a lot more learning and knowledge. And what a time to learn something new on a Saturday evening when you technically have nothing else to do. So if you are not putting in side hustle, if you're not putting in Saturday and Sunday on building your own startup, when will you do or build your own company? So coming back to the topic for today, so we'll be talking about three things primarily today. We'll be talking about pitching, we'll be talking about pitch decks, and partially I will also be talking and covering things around funding. As I said, if you go onto internet and search for any of these three terms, the internet is over cluttered with information. It's super noisy when it comes to pitching, pitch decks, and funding. And there has to be some sort of a structured and right approach before we are able to tell people how to kind of get started. And this is going to be very, very useful and informative, for most importantly early stage entrepreneurs, and people who are starting their entrepreneurial journey for the first time. So I hope it will be beneficial, and we'll be here for another 45, 50, 60 minutes more, and be based on the questions we'll navigate accordingly. Okay. Okay, so let's start with the question number one, with a very basic. What is a pitch? A lot of times people come and ask that what is a pitch, and then we'll start decoding it in a much more elaborated way. So basically, pitch is nothing but a way of telling about your business to people in general, right? So whether you are going to a client meeting, whether you're going to an investor meeting, whether you are technically even pitching your idea or your business to a potential co-founder or a potential employee in the early stage, is very, very important. So a pitch is, very simply put, it's an art of conveying what you have in your mind to the next person across the table, and that is how we do it. Typically, pitching as a word is in generally used for investor pitches and investor presentations, but of course pitching can be anything. Pitching can be when you go and pitch your idea to a potential, as I said, potential co-founder, when you pitch your idea to a potential employee, when you go and pitch your idea to an investor or to a prospect client, and if you want to make a sale. So if you go by the technical definition, so introduction or introducing your business idea or any and everything around your business in primarily a verbal come a PPT format. So I'll decode it, that when you need a presentation and when you don't need a presentation, when it only has to be verbal, we'll talk about that as well. Yeah, so whether just verbally or with the help of a presentation, combining them together, you deliver a pitch. The idea is to, very simply put, convince the next person to come and work with you in some shape and format. So either you are trying to raise money, you're trying to generate business, or you're trying to hire people to work with you. So any of these can be an objective, or most or other can be, you're trying to seek a mentor, you're trying to seek an advisor, you're trying to reach out to a very senior guy so that he should come and be on your board, anything like that. So anything where you want to convince any person to kind of come and work with you is basically uh, a pitch. Okay. Now, so the main, as I said, the main goal of the pitch is to gain new investors, gain new customers, investors, and stakeholders, so that they can come and support you in multiple other formats. So now let's talk about the types of pitches. So typically there are three types of pitches. One is an elevator pitch, then you have something called as a short form of pitch, and then you have something called as a long form of pitch. Let's decode all of these three. So an elevator pitch is anything between like a 30 to a 60 second to a 90 second thing, and it's primarily a verbal pitch which is delivered in person, without a pitch deck, right? And the idea behind the elevator pitch, it is something called as conversation kickstarter. So imagine you're meeting people in general in a startup conference, in a business conference, you're meeting people in general, in the market. You have met a potential client on the way, and you're just doing general reach outs. So if you have to explain about your business, about your start to anybody in general in like a quick 30, 60, 40, 50 seconds, 70 seconds, primarily verbally, without a formal setup, without a laptop, without a presentation. You basically do an elevator pitch. We will technically be doing a different session on what is an elevator pitch and how do we do it, right? So that's a separate topic for another day. We'll not go deep into elevator pitch today. It's a separate topic and a separate skill to master, right? Second form of pitch is basically short form of pitch, which we are going to talk in depth at length today. So it is anything between like a 7 to 10 minute of verbal pitch. And what do? You go with a pitch deck, typically an investor pitch deck. When you go for a short form pitch, the investor deck is typically like a 12 or a 15 or a 17 slider presentation, well designed, well documented, has multiple components, which we'll cover in the later half of the section. And of course, this type of a pitch is done between anywhere between 7 to 10 minutes. And this one pitch is given or done generally in demo days, startup competitions, or anywhere when you have to pitch your idea to an investor in more or less like a formal setup. So that is where you use a short form of pitch. And whenever you search or Google about pitch deck, basically most of the information that is available on the internet is about the short form of pitch. And that's why I'm trying to help and decode this for you. Then of course there's third and another category called as long form of pitch. What is long form of pitch? Long form pitch is basically which is a verbal pitch beyond 30 minutes, right? Is carried with a much more detailed in-depth presentation along with documents, technical reports, anything which enables you to prove that what you have, the information that is conveyed in the short form of pitch is validated. And most importantly, it is done in a one-on-one environment, one-on-one setup, majorly when an investor has seen a presentation or an incubator accelerator, somebody has seen a presentation and they show an interest. They now want to come and talk to you. They now want to come and understand more about your startup, and they kind of have an interest in terms of getting you funded, right? So summarizing all these three together, short form pitch, you do it without a presentation, typically lasts from a 30-second to a 90-second, done majorly in a verbal setting or a casual setting, is typically a conversation kickstarter. Short form pitch, 7 minutes to 10 minutes, depends upon what the platform is. You typically do it in an incubator presentation, demo day, startup competitions, is carried alongside you do it with alongside a presentation, a PPT, and this presentation is called a pitch deck. You typically have 12, 15 or 17 slides in that particular deck. Last but not the least, long form of pitch, which is roughly 30 to 40, 45, 50 detailed pitch or a detailed presentation. And in this, you just do not have much more in-depth presentation, but you carry alongside relevant, technical, important documents, which are now presented to investor in order to prove what you have conveyed in the short form of pitch. And this entire thing is generally done in more like a one-on-one setup, one-on-one environment, post the investor interest in your startup after a demo day or a one-on-one or a meeting maybe. Yeah. So these are the three types of pitches you should know about. Then once you have understood and once you kind of know that what kind of pitches are there, typically when you reach out to an investor, you will of course be trying to reach out to him to either or primarily you will be reaching out to him to give a short form pitch. Elevator pitch is typically, as I said, is done in a verbal environment. You will be able to give it to an investor or a potential client or a potential employee in a physical or a one-on-one setting, or like because it's a conversation Kickstarter. But typically when you want to reach out to an investor, because everybody keeps on asking, hey, how do we reach out to an investor and how do we raise money? I have a presentation ready. I want to go to an investor. So any startup founder who's looking to raise money or who has a presentation ready and now wants to reach out to investors, this is one question, that how do you go and pitch to an investor? How do you get a chance? How do you create this opportunity for yourself as a startup founder to go and pitch to an investor? So basically, there are four ways you as a startup founder can get a chance, or rather technically three ways. I've merged first and second. I'll elaborate more onto that. There are basically three ways how you can get a chance to pitch to an investor. So number one is you need to be a part of any incubator or any accelerator program. And once you're a part of an incubator or an accelerator program, the incubator will have a graduation day or something called as a demo day. And demo day is when you have gone through a structured program, structured mentoring, structured incubation sessions during your incubation with the incubator. And then post that, incubator wants to make you graduate, and they invite all the investors both in virtual and physical setting, and they would ask you to go and pitch to these investors. This is where you go with a pitch deck, a short form pitch that you give in like a 7 to 10 minute time, followed by a Q&A. Roughly 15-20 slides is what you have, right? So that's part number one. Be a part of an accelerator program, be a part of an incubator, apply to so many accelerator incubators out there. You get a chance. Once you graduate, you get a chance to pitch to investors. Second is another very interesting way you can reach out to an investor or pitch to investor is applying through startup competitions. All your, so especially if you are a student who's watching this, maybe live, maybe later, I think there's a lot of support. And I think I've spoken about this in my first AMA. If you haven't seen the first AMA, first episode of AMA with DNK, go and watch this, because I've given much more information in that, where I was speaking about why it's a great time to build a startup, especially from the student point of view. I think there are enough competition which are happening now, which are only student specific, because now there are students who are building their companies full time. So therefore, that means there are full time investors and platforms where you as a student can raise money. So there are a lot of startup competitions for students, not for students, general startups out there. There are a lot of competitions being hosted by colleges. So if you are somebody who's looking to raise money, go and apply to all these competitions. This is another great way to reach out to an investor, because all of these competitions will call jury members and judges as they'll call investors as jury members and judges. And it's a great way of networking and reaching out and identifying who is the right person. Third, and the best way to reach out to any investor, but I think the most difficult also because it's overcluttered and there's too much of noise in that space, is reaching out to investor on social media, right? It might sound like a very typical cliched advice, but I think if you're able to crack the correct formula of reaching out to investor on social media, I think a lot of stuff, a lot of things from your your life will be simpler. Basically, you if you're able to crack this entire thing, or else you will end up wasting time into reaching out multiple people, right? So when you are reaching to people or a potential investor on social media, the most important thing that you need to understand and figure out and take care is that do not spam them, be courteous, and most importantly, make sure you're able to convey the meaning and the message and the intent upfront and very clearly. And maybe also in writing, put up an elevator pitch or a summary of what your business do. I hate it when people reach out to me on social media and they would simply put hi and they end the conversation. And they would wait that I should also write hi, and then they start chatting. Guys, in a professional setting, in a professional environment, when you're talking to or reaching out to somebody who's a professional, you do not chat like you're chatting with your friend. You do not simply just write hi and then you kind of wait for the other person to reply. It's not happening, right? And I get hundreds of such messages every day, and it's very, very frustrating. So whether you're reaching out to somebody on WhatsApp, if you have his WhatsApp number, if you are reaching out to somebody on LinkedIn or Facebook, please make sure you're writing a proper summarized message, clarifying your intent as in why you're trying to reach out to them, who you are, what you do, what is a startup all about. Maybe in a 3 or 4 line, you can summarize everything together, and you can simply write a call to action that, hey, I'm looking for the X amount of fund. Can you help? Can you connect? Can you mentor me? Can you listen to my pitch? This is a pitch deck I'm attaching with the format. Can you have a look and get back to me? Something like that. Be courteous, be respectful, do not spam, do not bother people. Of course, you have to be persistent. That's another game. But there's a difference between being persistent and being a pain in the ass. So don't be a painful person. Be persistent and be humble and be courteous and try and reach out to people in a proper way. Now, with this, as I've said in the last part, that you should also be able to send your presentation to people, and you should be able to share your presentation with investors. A lot of people come and ask me, and this is the question number 3 I'm going to pick up, that and it's kind of a combined question. One, is it safe to share the deck over the internet? Is it fine to share the pitch deck without an NDA? Is it okay to share the pitch deck online with people? And most importantly, then how do you do it? How do you share your deck? Right. So we will now talk about it at length. Number one, if you are an investor, or if you are an angel investor, or if you're somebody who's a little prominent or well connected in startup ecosystem, I'm sure you would be getting mentoring requests, advisory requests, support requests, funding requests, or anything like that from tens to hundreds of people every day, right? So if you ask anybody to sign an NDA, that person by default will not even talk to you. The reason why I'm telling you, I'm not against NDAs. I'm not saying that people should not sign NDA, but people should sign an NDA when you are releasing much more confidential information in public domain, or in the case when you are kind of revealing much more confidential information to the investor, which typically happens in the third round of discussion, which is basically the long form of pitch, where you start revealing trade secrets, where you start revealing much more in-depth things about your startup. So in the first meeting, you never ever go and reveal the trade secret or the secret sauce, or the numbers about your company, or things which are can make or break your entire business model or business or startup, right? You never do that. So if you are going to reach out to anybody, and if you'll ask him that, hey, please sign an NDA, that person will not even talk to you. And therefore, one investor will not sign an NDA. Person whom you're reaching out to for mentoring will not sign an NDA. If somebody is doing it, I literally, to be honest, don't care. People can, but typically it's not the best practice, or people refrain from signing an NDA at such an early stage. And therefore, this brings us to the point that pitch deck is basically a public document. I'm sure all of you who are watching this, and all of you who are into startup ecosystem, you would by default for sure would have seen the Airbnb pitch deck, the Uber pitch deck, and likes of those. The reason why all those pitch decks are in public domain and now in public domain is because, as I said, pitch deck is basically a storyline. It's basically a letter of intent. Consider it to be like that. Pitch deck is not highly confidential. It is confidential, of course. You can't just keep on throwing it everywhere, but it is not highly confidential document. So it is fine sharing a pitch deck with potential investor online, and do not fall into the NDA trap, because the moment you fall into the NDA trap, the moment you say that I will not share the document without signing NDA, the investor, if he's a serious guy, if he really is a genuine investor, will not get into that conversation with you further. Therefore, what is the best practice of sharing your pitch deck with people on the internet? The best practice, or the best way, is to share either a Google Slides format. But I'm not personally a very big fan of Google Slides, for a very simple reason, that when you start sharing in Google Slides, the designing goes haywire, right? So if you have designed a comprehensive, nice looking, well designed pitch deck, and the moment you upload it, it's a custom design, it's not just on the template, and if you upload it on the Google Drive, and Google Drive does not support all the possible fonts, your pitch deck will just blow apart. So the best practice, the best way to share your pitch deck, is share a PDF file. Whosoever is designing the pitch deck for you, whether a designer designing it in Keynote, or a designer designing it like any other design software like a Corel or an Illustrator, or any other software, or a designer designing it in a PPT, always make sure that you're able to extract out a PDF and only share PDF. Now, a lot of people would ask that, hey, if you're saying if that we should share a PDF, how do we set updated document? How do we update it at our end? See, the idea behind this is that you should have the original editable copy or editable file in your computer or in your laptop. And if you're using any custom fonts, you know, If you are sending your PPTX file or PPT file to somebody without those custom fonts, I'm sure half the people will not take a pain of downloading those custom fonts for you and installing them and then running your PPT. And if the people are, if the investor is not going to download the fonts, your PPT will just crash apart. So the simplest and the most easiest way is to share a PDF. Now, a lot of people also ask me this question, and it has happened multiple times when people have come and asked that, uh, okay, so this question, that how do we share videos in presentation? So this is, when it comes to videos, this is little challenging. Why? So when you talk about sharing videos on a presentation, imagine video, of course, is a heavier file. Any video embedded into a PPT file will make the file heavier, and therefore you imagine if you receive a PPT file or any sort of attachment which has been sent, which has been sent by a person whom you don't know exactly, or is a cold mail, you will never ever bother to download a 50 or a 60 or a 70 or a 100 or a 200 MB file on your system and open it. And again, if that file has a video, there's another chance and there's still a probability that the font might still mess up and the PPT might still blow apart. So the best practice is send your PPT in a PDF, and in a PDF create a link or create a YouTube link, and on YouTube you can make your videos private or make them unlisted so that they're not publicly available. So the video should technically be hosted on YouTube, and the PPT and the pitch deck should technically be shared in the environment in a PDF format. Now, what happens offline? If you're going for a presentation offline, if you're going for a presentation in offline environment, again, take a PDF file in a pen drive along with a downloaded video. Because a lot of times in India, I have seen it happening that a lot of times when startup guys make it on a Google Drive or make it in a PPTX format, the challenge is that the moment you plug your pen drive into another system, the PPT file, because it's going to ask for fonts which are custom. If they're not available in that system, again, the PPT is going to blow apart. And your worst nightmare would be if the internet is not proper. I know that we have been speaking a lot about internet penetration. We have been speaking about lot that internet is great. We have better internet, but still, why take a chance? So if in an offline environment, always carry a PDF file and a PPTX file in your laptop along with a downloaded video if you have a product, a video or a demo of any kind of thing you want to showcase to investors. And in the online environment, while share a PDF with a YouTube link. I'm kind of envisaging that somebody who's downloading a PDF on the internet would of course have a YouTube running, right? So summarizing it all together, online sharing, share a PDF with a YouTube link, make the link unlisted. Offline, when you're going for a presentation, take the PDF in a pen drive with a PPT file with it and the downloaded video. All these advices will make your life much simpler while doing the presentation. There'll be one less hassle. I've seen entrepreneurs getting collapsed at last time, getting nervous at last time, getting anxious at last time, because any and every pitch is actually a moment of a lifetime. It's a make or a break situation for you because you're going to pitch to an investor. And imagine these kind of small glitches can make you extremely anxious, and then you can fail in the entire presentation whenever you're doing it, right? Okay. Now, when you are sharing the presentation in a non-physical environment, so that means that you are not there to explain the presentation. So again, this is one advice that I give to all the entrepreneurs I mentor and I work while making the presentation. Typically, there are two types of pitch decks you should also have or create or carry. One is a presentation which is like a presentation which is given on a projector where you are explaining. This presentation is one where you have less content because you do not want your audience to start reading content, right? Because the moment your audience starts reading content and the moment they get distracted, they will stop listening to you, and the moment they stop listening to you, you will lose their interest, and therefore they will not be able to kind of catch up with what you're trying to tell them, and therefore you will lose the investment opportunity. But the challenge is that if you're sending the similar presentation with limited content, and we are following the best practices of presentation, which is like a bold font and contrasting font and less content, in an environment where your deck is going to go over an email and you are not there to explain it to the investor, the challenge is that it has to be self-explanatory, and therefore does not mean you have to overclutter it. So 4 points that how to create a send worthy or a deck which has to be sent over the email, which is read worthy. One, put in mid level content. So you should not be creating so less of content, or you should not have so limited information in that deck that it is that people are not able to understand it. Neither you should create it like a book, right? It should not be like a 50 pager novel. It should have very clear and crisp points and some mid level content, like a supporting data, supporting sentences, supporting structure, to elaborate more onto the pointers you have spoken about. Number one. Number two, keep your communication extremely clear and crisp. I cannot emphasize it enough that if your deck is, if somebody is not able to understand your deck within like first 2 minutes or first 1 minute, he will not read your deck. A great deck should not just have a great story, and we'll talk about story later on, but if your deck does not have a very clear cut communication, if it is not very simple in terms of reading, nobody's going to read it. So people are not looking for fancy information. People are not looking for, romanticized stories. People are looking for, of course, story is a very integral part, but don't overcomplicate it. Don't start showing your writing skills. Don't start showing your artistic skills. Make it absolutely to the point, very crisp, very clear, and make it very, very actionable. After reading your deck, people should be able to understand who you are, what you do, and why have you sent that deck to them, and what do you need from them. Third, as I've already mentioned about, make sure that you're using a PDF format. It's easier to use, it's easier to open. Sometimes if your word goes corrupt, your keynote goes corrupt, if you're using a MacBook or a Windows, PDF is a universal format. Every kind of a laptop opens it. You don't have to worry about who's going to open and where. Last but not least, keep your videos on YouTube in an unlisted format, and that's another best practice for you to understand. As I said, for a demo day, use a PDF, download a video, and keep a PPTX file for editable format. So mid-level content, clear communication, PDF format, best practices. You will see a 50% more opening and conversion rate in your client communication, in your investor communication, in your email communication, the moment you start adopting these practices while reaching out to people, right? I will quickly take like a 10-second pause here, and I want you to kind of seep in all this information and learning, and then we will move ahead. And then next, of course, we'll now jump on to the pitch deck part, which is more exciting, right? Okay. So if you have any questions till now, post them into the comment section below. I'll be more than happy to pick up the questions later on in the end. But other than that, if you don't have a questions, thank you for listening, and thank you for kind of being with me here on a Saturday night. And I hope it will add a lot of value in your startup journey. Okay. So moving ahead, next part we're going to talk broadly is about pitch decks. So as I said in the beginning also, if you are somebody from the startup ecosystem, if you're somebody from the entrepreneurial ecosystem in India, if you're an entrepreneur, if you're searching, googling all these information on the internet, uh, pitch deck, pitching, funding is the most hottest sector. It's the sector which everybody wants to talk about, and it's extremely noisy on the internet. So therefore, that's the reason why I'm trying to helping you in decoding everything together. So what is a pitch deck? So pitch deck is basically, it's a standard templatized 12 to 15, 17 pager document, not more than 20, of course, less than 20, and anything beyond 12. I'll tell you the reason why. And I'll also talk about a few famous pitch decks when you're going to talk about all of these things, right? So it's a standard document that you send to an investor with an uh, with an intent to tell them that you're raising money, and you want to kind of generate some interest in their mind about your startups. That is what a pitch deck. So a pitch deck is basically a summary about your startup, the problem you're trying to solve, the solution you've built, the traction you have, why you're so unique, and why you're reaching out to investors in order to raise money. So that is a pitch deck. So now we'll quickly look at a few broad components. I will not go into too much of details in terms of component, because we will be doing a dedicated webinar on dissecting pitch deck slide by slide. But here in this AMA, I'll quickly touch base upon the broad components, and then we'll move ahead. And then, of course, I'll move on to the interesting part, as in what Ratan Tata says about the pitch deck, and what Guy Kawasaki says. We'll touch base upon all those parts. So broad components of any pitch deck is that you have a title slide, of course, where you put your name of your startup, you put a tagline, you have an elevator pitch slide. You talk about the problem or the pain point, you talk about the customer, you talk about a solution slide, you talk about market analysis, why now, why it's such a big and a hot market, you talk about value proposition, you talk about product info, you talk about your competition, then you talk about operational roadmap, roadmap, business roadmap, multiple types of roadmap and interaction points. You talk about the financial information, what makes you such a great startup. You talk about the funding you're looking to raise, and last but not least, you talk about the team. And then, of course, you talk about, as I've already spoken, you talk about a few more things like traction, business model, how it works, why now, things like that. So there are around 15, 20 broad parameters, broad factors that uh, combined together will create a great pitch deck for you. If you want to download a template which we have created, I have given the link in the description of this video. So if you're watching it on YouTube, of course, that's the only place we're streaming today. If you're watching this on YouTube, go into the description. There will be a link called resources.powerdeck.com or .in. Just click on that link, and you will be able to download a pitch deck template that we have created, that most of the startups we mentor and we work with use. Okay, so now we have it's called resources.powerdeck.in/free template. So you can download that particular template. Now, one more question that comes here is which comes from a lot of people, a lot of early stage startup founders, a lot of founders who are in the process of fundraising, that what is a universal template, or is there a universal template of a pitch deck? So the answer to this question is that there is no universal template. Basically, right from your 500 startups to Guy Kawasaki, Sequoia Capital, Airbnb, there are hundreds of templates available online, and of course, a few of them are famous ones, and few of them are standards. So 80% of the material that goes into a pitch deck is common, and there's 20% can be changed here and there based on what the inviting incubator, accelerator, or investor is looking for. Right? I'll repeat this thing. What I'm saying that there is no one single universal pitch deck template, although there are few templates which have been given by famous incubators, accelerators, and famous personalities like Ratan Tata and Guy Kawasaki. And all of these templates have a 80% common data, wherein 20% is very personal or is modified based on the requirements of that incubator, accelerator program, or the investor to whom you're applying. Right? So as I said, the kind of broad components that I've spoken about, all of these components combined together. So I have another kind of a checklist with me. So executive summary, problem, solution, market validation, why now, product, market size, business model, underlying magic, competition, competitive advantage, go to market strategy, marketing plan, founding team, board of advisors, mentors, traction, milestone, if you have any testimonials, press information, PR, fundraising, financial use, all of these components together combined will make a pitch deck. And as I said, 80% would be common across templates from a few big personalities. Ratan Tata recently released one of the templates around pitch deck, which went really, really famous. There's one out there in public by Guy Kawasaki. Then you have one by Y Combinator, Sequoia Capital, 500 startups. And of course, we have given our own template link in the description. If you want to download that one, click on the link and download that. Right? Now, there are another famous equations and formats that people follow while making pitch decks and pitch templates, and this is what we'll talk about more. So let us say, uh, a lot of times people say that the pitch deck has to be crisp and clear, and every slide should convey an information and meaning, and therefore an ideal number would be somewhere around 15, 16, 17, 18, technically less than 20. But then Guy Kawasaki template has only 10 slides, and his 10 slides are title, problem, opportunity, value proposition, underlying magic, business model, go to market plan, competitive analysis, management team, financial model and key projection, and last is current status, accomplishment to the day, time, and use of funds. Now the challenge with this template is you cannot cram all this information, which is roughly has to be put in 18, 19 slides into 10 slides, and therefore the moment you start doing it, your entire pitch deck becomes like a crammed up pitch deck, and therefore an investor might not be able to use it. So do not fall into the trap of following a format given by a famous personality. I'm not saying Kawasaki's template doesn't work. It's a fabulous template. Millions of people and millions of entrepreneurs have downloaded and used it. But you as a founder should also be able to put in your own brain and kind of insights. And then what is or how you are able to convey the right story, the great story to a potential investor, so that it becomes very, very interesting for him, right? Ultimately, it has to be a great story that you need to pitch. Ultimately, everything is a story. Every startup is a story, right? So again, there are other components as well that people need to kind of understand and make sure which are correct into the pitch deck other than the content. So you have to make sure the design is great. It has to be aesthetically accurate. If you are a startup, if you're a early stage startup and do not have brand guidelines, if you are a startup, if you do not have, let us say, logo, use a standard kind of a color combination which is contrasting. But if you have a standard brand guideline, make sure that you do not go off the brand guideline. Instructor designers like that. So design plays a very critical role. Fonts play a very critical role. Do not use stupid fonts like Joker Man and Calibri. Use good fonts. Worst, you can use Arial. Best, you can go for any kind of product science or robot or likes of those, right? Use bright colors, use contrasting colors. Your presentation should not be like that people are not able to understand it, and while they're reading it, use high quality images. There are enough free, royalty free, and even publicly available high quality images available online that you can use them. Make sure you're not using any sort of a stupid crappy template or table in your pitch deck. Use infographics, pie charts. Most importantly, as I said, do not use templates which are bad looking. Worst case, you don't want to hire a designer, you don't want to hire an agency. Download a template from any of the paid kind of platforms and use them, right? But make sure your deck looks good, right? Do not make a deck that nobody wants to read. Okay, then let me talk about a few. As I said, I spoke about a few rules. Now let me quickly switch to a few more questions that I've got. I hope if you're watching, yes, I think it's a great point by Arjit, which he says also works well on the phone. Yes, absolutely. Guys, all those who do not know Arjit is a very dear friend, and he used to work with CII, and he has himself seen thousands of pitches in his life. And I think that's a great insight that it works well on the phone. So if if an investor is going or is on the run, he can use a handheld device to watch the presentation, and he doesn't have to bother in terms of data as well. So I think PDF is a go-to solution for every investor, every entrepreneur. Okay. Allow me a few more seconds. Okay, as I already spoke about, guys, another few challenges, and now we're kind of talking about the best practices. Let's move on to kind of the best practice of pitch decks and pitching, and I pitching pitch deck fundraising is like is like a 6-month course in itself. I want to kind of touch base upon broader points only in this thing. And of course, as I said, that we will be doing a few webinars later on where we'll be giving you in-depth knowledge about all these components. But yes, of course, as I said, the idea behind today's session was to give you a broad perspective, brush up the broad knowledge, and give you broad insights around pitching and pitch deck and funding, right? And of course, we'll have another dedicated AMA on funding later on, right? So another big mistake that a lot of entrepreneurs make is that they use a go-to-market strategy document, and a lot of guys also put a BMC and LMC in their pitch decks. Guys, never ever ever do that. When you're pitching to people, an investor is not looking for a go-to-market strategy. He might be looking for certain goals and milestones, but do not put in the entire GTM document in a pitch deck. It makes your pitch deck looks crappy. It looks claustrophobic, right? So never ever put a detailed kind of a go-to-market, like a 2-year go-to-market plan in your pitch deck. Most importantly, do not never ever put a BMC, business model canvas, or LMC, lean model canvas, in your pitch deck. I've seen people putting in a screenshot or a PPT editable version of a BMC, LMC in the pitch decks, which makes it horrible. Do not do that ever, right? And I think these are only a few broad questions and pointers I have. Of course, I will be taking a few questions around investors. I think we have already covered things around signing an NDA. I will then, if you give me a few more seconds, I think, yes, we have covered the broad components. We have covered the best practices, kind of. Okay. How many slides do you need in a pitch deck? I think typically, I think I've already spoken about that. How many slides you need in a pitch deck? Ideal is 15, roughly going up to 18, not less than 20, more than 10. 15 to 17 is the sweet spot. There are a lot of rules. One of the biggest rules is by Guy Kawasaki, which is known as a 30-20-10 rule. It typically doesn't work out anymore. You may or may not use it, but but then if you use it, your presentation will have very limited information or very limited data. So if you are using that particular rule, that rule will only be applicable if you are making a pitch deck from the presentation point of view. You will not be able to use the 30-20-10 rule in a presentation, which has to be shared over the email, because then your presentation will not have any data and the investor might not even be able to understand it. Types of pitch deck, we have already covered that at length. Should you put financial data? No, never ever put another thing is never ever put tables, never ever put the cash flow projection Excel sheet. All these things like Excel sheets, annexures, extra data points should go in annexure or should go as separate documents with the presentation. Try and avoid putting in as many tables as possible. Technically, you should not be putting in table. Try and put in infographics, try and putting in pie charts as much as possible. It should be a summary, right? The bottom line is your pitch deck should be a summary for the person who's reading it. It should not look like another burden. Another very interesting question. So another very interesting question is, how do you end a pitch deck? Okay, now this is very interesting and exciting. So a lot of times people come and ask that, how do you end a pitch deck? So you always end any sort of a presentation with a call to action. This is the reason why even if you see most of the YouTubers online, they always end their presentation with subscribe, like, share, and comment and things like that, and press the bell icon. So they give you a clear-cut call to action. Despite the fact people have millions of followers on their social media, they have millions of followers on the YouTube channel, they once again want to reinforce the fact and give you that CTA, call to action, just because they want to reinforce the notion in your mind, and it has a very strong recall factor. This is one same practice every entrepreneur should do while doing a presentation and a pitch deck. If they are in a demo day, if they are in a competition, they should always end the presentation with a call to action that, hey, this is the amount of money we are trying to raise, and this is the amount of money which will last for this much of time, and for this reason, this is how you kind of break your ask slide. But if you are in an environment where you are not looking to raise money but you're still presenting, there are multiple ways and multiple things you can put in your call to action. It's a very common question: how do you end a pitch deck in a non fundraising environment? You can ask people to be okay, so let's start from the small, like from the most difficult, and we'll move on to the lowest hanging fruit. So the most difficult is, you might be looking for advisors and mentors. You might be looking for potential people to buy your product. You might be looking for potential collaborations and partnership. So ask that, hey, we are looking for this sort of a co-founder, we're looking for this sort of mentor, we're looking for this sort of an advisor. Hey, we're looking for more companies to collaborate and work with us. We're looking for more people to download our product and application, use it. Last but not the least, if you have nothing else to offer, ask them to go and follow you on the social media. That's the lowest hanging fruit. I think every conversation should end with a call to action, no matter who you are and what you do. There's a reason why somebody has invested their time in you, and because they're listening to you, and same goes vice versa. So all those who are listening to me this right now, my call to action is, go and of course follow me on Instagram and other social medias. I'm pretty active, and but the most important is, from today's kind of presentation or live, your call to action is, go and download the template which is attached in the link of the description. Go and download that, right? So very interesting question that has come. How do you end a pitch deck? Let me check for more questions if I am getting any. Okay, a lot of times people ask, what is the perfect pitch deck? No, there's nothing called as a perfect pitch deck. I'm working on a template which is called as a nearly perfect pitch deck, but technically there's nothing called as a perfect pitch deck. There's nothing called as a universal pitch deck template. I have told you earlier also, the famous pitch decks or famous templates are by Guy Kawasaki, Ratan Tata, Y Combinator, Sukhoya, 500 Startups, and likes of those. But every incubator, accelerator, and investor modifies the presentation or the template as per their understanding. I'll give you another very simple example. If you are going to pitch to an impact fund, if you're going to pitch to a fund which is working around social impact, which is working around people under the bottom of the pyramid, you will have to make sure there's a slide which speaks in detail about what you have done till now, and what is the impact or what is the social change your business will create. But if you are in a hardcore commercial setup, you might not even need a social impact slide. So this is the critical difference. All of you need to understand. If you are, you have to modify your deck based on whom you are pitching and where you are pitching, right? So there's nothing called as a perfect pitch deck. There's no one mega template to rule them all. There's nothing like that. Okay, what to include? Okay, very interesting question. Is pitch deck a business plan? No, guys. Pitch deck is not a business plan. There's a huge difference between a pitch deck and a business plan. Typically, investors are not looking for business plan, and business plan is generally by people who are into the idea stage. Business plan is a detailed document, a projection of maybe this is what you might be doing. But a pitch deck is more comprehensive, more detailed, more action oriented, and it's basically a more comprehensive but a practical summary of your startup. So business plan is not a pitch deck. They're two separate documents. Investors do not want a business plan. You technically don't even need a business plan. If you, rather than creating a business plan, I would strongly recommend and suggest, create a BMC, create a LMC, lean model canvas, business model canvas. If you are an early stage startup, if you are into ideation stage, not sure about the idea, create an LMC. If you are a business looking for a new business model, or if you are a business which is already existing, if you're a startup which is already having revenue but want to now figure out more business models, create a BMC. We'll have a separate discussion on at length how to create a BMC LMC. There are enough videos otherwise already on the internet. But most importantly, you don't need a business plan, and pitch deck is not a business plan. Last but not least, pitch deck will only help you to raise money if you are, if not revenue generating, but operational startup. I'll give you more details on this. Give me 10 more seconds. Let me pick up a few more questions. And this is a very interesting point that we have kind of started speaking, and I think it's going to be super fun and super interesting. Okay. So I have a very interesting point around this. So I keep on getting this question from so many people, and of course, I wanted to touch base a little on funding as well today. I get on. A lot of people keep on asking me this question, and even on the internet, this question is filled up that I have a great idea, I have $1 million idea, I have $1 billion idea, I don't have money to do a startup. How can I raise money? Okay. So there are 3 or 4 broad ways of raising money to build a startup or build a company, right? One is, of course, which is something like a pre-seed money or a seed money. When you are building a business or when you're building a startup, you always put in your own money. I have again spoken enough about this already in my previous lives. You never ever get, or it'll be hardly it'll be hardly it's a rarity that it will happen that any investor will come and give you money in an idea stage startup or just in the idea phase. And if this is happening, you are technically going for a suicide for a very simple reason. But because if you are into idea stage, you might not be able to raise a lot of money from the investor, but you will be end up losing a lot of equity and technically the ownership of the company. Never ever fall for this trap. Any smart investor will not come and give you money to for your idea. Idea has literally zero value. All those who do not follow me on LinkedIn, I have technically written a detailed article for this on LinkedIn. Go to my LinkedIn account, read my article, check this out. Idea has zero value. So therefore, if idea has zero value, there's no value. So there's no valuation. Therefore, no money can be given or no money can be exchanged. Stop running after investors, or rather fraud investors with the idea, and in this hope that they will give you money. In any smart, any intelligent, any knowledgeable investor, anybody who's serious will not give you a single penny to do a startup. So how do you get money? You get money, you pick up money from your own savings, or you do a side hustle, and then you kind of save that money and put in your business, and you raise money from your friends and family. These are the only 3 ways. Or else you apply with your idea to an incubator, to a government scheme which supports idea or prototype, or company that are at a prototyping or very early stage. But again, there'll be huge competition there. Or you go to a bank, but again, I'm sure the bank will not give you, of course the bank will only give you debt money, but again, it will be difficult for you to raise debt money just with an idea. So idea has zero value, and it's other than your friends and family and people who do not trust you will not give you money. Another related question that comes is with people that, hey, I'm in a full-time job, I want to do a startup and give me money so that I can leave a job. If you can't take a risk on your own in terms of putting your own money into the idea, and if you can't build a product yourself, if you can't start building the company, if you can't take the risk yourself, why somebody else will take the risk for you, right? So startups typically are not built part-time. You are full-time building a startup and maybe then doing a side hustle like a freelancing or a consulting so that you're able to make money. But with a full-time job, technically even it's illegal in some cases, because if you're into a full-time job and if your startup has got any sort of a similarity with the kind of business you're thinking of building, you're clearly in a conflict of interest and you can go to jail or maybe you can be sued. So don't get into that nonsense that you can part-time build a startup. It's not happening. So as I said, a lot of people ask this question. I have an idea. How do I get money? No, you do not get funded. You do not get money. Of course, there are a few exceptions, but that's a rarity. I'll not go and talk about that. Also, most importantly, a lot of times, despite the fact you're into operations and you're making money, you might not be able to raise money because not every startup is designed to raise funds. So if you haven't watched my episode number 1 of AMA with DNK, I would request you to go and watch that, because that is where I have defined and given at length information about what is a startup. And there's a possibility that your business or what the venture, okay, let me call it a venture, the venture you are trying to run or the venture you are running does not even qualify to be a startup. It might be just another business. So if all the possible parameters do not fall in place, you might not even be called as a startup. And even despite the fact you are a startup, it is not necessarily that you might be able to raise money. So not all startups are able to raise money. So let me give you a broader figure. 99 out of 100 startups fail, and out of the 1% that survive, only 1% of that survival startups or survived startups are able to raise money. And that too, again, at an angel round. That is how low is the probability of raising money for your startup. Of course, once you have raised money, the kind of future becomes simpler, because that means you have proven yourself. So if you're a second time entrepreneur raising money, it will be much easier for you. So technically, like, it's exactly like getting a second job. Your second job will be easier than your first job, and finding a third or the fourth or the fifth will be much easier than the previous ones. The most difficult is to get the job for the first time, right? And we all know the joke that without the experience, people will not hire, and without a job, you'll not have experience, something like that. So without, everybody would want to have a safe bet and want to invest in a startup which is pretty safe, and nobody wants to invest in a very high risk startup, any which is startup funding is a very high risk business model, right? Okay, I have already spoken about this particular question, which is, will investor sign an NDA? No, he will not sign an NDA. Do not fall into the NDA trap. uh okay, okay, it's already 1 hour. Okay, thank you so much for being here till now, and let me see if I've got more questions, and then we will wrap for day. How do I get funded for a new startup? If you are okay, another thing all of you need to understand here who are watching this, uh, and let me say this statement, then I'll try and elaborate. Investors do not fund pre-operation. Let me repeat. Okay, investors do not fund pre-operation startups, but they're fine funding the startups which are pre-revenue. But even in that case, you need to have a revenue model. Let me repeat once again, and then I'll explain. Investors are fine, or investors do not fund a pre-operation startups, but they're fine, or they rather fund pre-revenue startups, but you at least need to have a revenue model. What do you mean by that? If you are pre-operation, that means you are not yet into the market, you're not doing anything, you are just sitting on an idea, or you're just sitting in a product, or you build something fancy, but you don't know what you're selling, right? And again, referring back to my AMA, in AMA 3, AMA 4, business model technology, we have already spoken about it, that you either sell a product or you sell a value. And if you haven't watch those 1 hour AMA, go and watch them. You will get more insights onto creating a business model. But if you are just sitting with a product and you do not have real customers, or if you do not have done a pilot, or if you are into pre-operations, investors will not give you money, right? Because that means you haven't proven the model you're thinking about. But if you are into pre-revenue but operational, that means you are working on free pilots, or you have, let us say, a freemium model, or you have a model where you haven't started monetizing yourself, but you have a proof that what you are selling works. That means you are into operations but pre-revenue. That is where the investors will have confidence that if they will give you the money, you will be able to scale the operations, and after a point in time you can start monetizing, right? So that is one space investors might give you the money. But again, in that case, you need to have a long shot revenue model. What do I mean by that? I mean that if you do not make money today, it is fine, but you cannot reach out to an investor or go to an investor and say, hey, I've done this, but I do not know how will I make money out of it. You need to have a kind of a long short revenue model. That means you might be able to monetize after 1 year, or maybe 2 years, or 3 years, or 4 years, or 5 years. Nobody cares about the timeline, but what people care is, do you have a revenue model? Have you worked out on a plan, on a model, that hey, after this much amount of time, or after this much what do you call, what's the right word for that, break even point, not monetarily, in time, or a critical mass of users. After I achieve this much critical mass of users, that is after when I'll be able to kind of monetize my model, right? So If you do not have a monetization model or revenue model, investor will not give you money. So I'll repeat once again for you so you can understand. Pre-operations, nobody's going to give you money. Don't even bother reaching out to people. They'll kind of chew you away. Pre-revenue, it's fine, but have a revenue model. There might be multiple revenue models or a single revenue model, but if you are in operations and pre-revenue, investors are fine giving you their money, right? Of course, the better traction you have, the better chances of negotiation you develop. So imagine if you have higher traction, or if you have some sort of money coming into your business, and you kind of are kind of profitable or breaking even, or if you're not burning too much of money, that means you're sustainable, and therefore you're not in a rush of raising money. And if you're not in a rush of raising that kind of money, that means that you can always negotiate better, right? And of course, another point is funding is no benchmark for success. Companies after raising millions of dollars have failed, and companies, in fact, rather in COVID times, you've seen a lot of companies, once they have kind of raised millions of dollars, they've put in and have kind of shut down, and kind of even traditional companies, 20, 30, 40, 50 years old companies have shut down in COVID times. So money and top line and revenue is not a benchmark of success. Okay, I'll pick up 1 to 2 more questions and then we'll wrap. Okay. I think I'll not answer this question right now, but because somebody has asked this, what is seed funding and how does it work? I think there are a couple of phases when it comes to funding. There are a couple of phases. I'll quickly touch base upon it, and in the funding game, we'll talk about this in detail, in depth. So you either, the first round of money you put into a business, or the first amount of money you put into a business in order to get started, is either pre-seed or seed, which is basically like planting a seed. You put in your own money in order to kind of getting started. Then of course, once you have kind of put in your own money, and you kind of kickstart, the second is angel investor, somebody who is kind of an independent HNI with some sort of high risk capital. He might come and give you this money in order to kind of scale a little. Then of course you get into the institutional investment, which is primarily like a VC model. And then of course you keep on raising multiple rounds of VC, series A, B, C, D, E, whatever, or maybe a pre-series bridge round, maybe through a group of consortium of independent angel investors, or maybe through a proper venture capital fund, or an institutional fund. And then of course last stage is IPO, after which everybody exists and you become a public limited company. These are 5 broad phases. And somebody is also asking parallelly, what does series A, B, C, D, E denote? Basically, series E is the first round of the institutional funding you get, and after that, every time you raise another round of institutional fund, you add a character to it. So it can be series A, B, C, D, E, F, G, H, I up till Z, and then of course, but nobody has done it. It typically ends at F or something like that, and then you become a public limited company. Mridul has a question. We have to laid too much emphasis on challenges faced during pitching. Mridul, I'm not able to understand your question. Can you repeat? Like I didn't get what you're trying to ask. You say that you have to lay too much emphasis on challenges. Mridul, I'm not sure what you're trying to ask. Challenges during pitch deck. I think there are a lot of challenges. I think I've already spoken about a lot of challenges during pitch deck, right? If you have any questions, just DM me on Instagram. I think I'll just put my Instagram link here, or people, I'll put in the chat. You can comment it there and ask me your question there, or maybe send a voice note. We can then talk. All right. So it's been 1 hour 10 minutes already. I think I'm not getting any more questions, so we can wrap. All those who are watching this till now, give it a thumbs up, share it with your friends, other kind of your colleagues into the startup ecosystem, and I hope this was useful. So as I said, it is just 1 hour, and talking about pitching, funding, and investment is too much of kind of information, but I believe that I was able to kind of give you broader insights from the investment and the funding and the pitching point of view. We'll of course have a detailed AMA around funding in the coming AMAs. Yeah, so that's all. So okay, so that's all from my side. My call to action is, of course, as I said, go and share about this episode. Go and share about the series. We do this every Saturday. I do this every Saturday, 9 p.m. I talk about startups, funding, pitching, investment, and all these areas. And the idea is to kind of give back to the startup ecosystem from where I have learned so much, and kind of contribute my knowledge and give back to the startup ecosystem. If you like it, share, uh, comment, subscribe, give me a thumbs up, follow my channel, spread a word about it. And if you have more questions, you can DM me on Instagram. You can most importantly DM me on my chat. And I hope to see you in the next live. So once again, this is Dilnawaz Khan signing off. Thank you so much for joining on today's AMA with DNK. I hope to see you in the next one. So with this, we will wrap. And thank you so much. Thanks, Pulkit. Thank you, Anurag. Thank you, Anurag. I like your kind of appreciation. Thank you so much. I'm getting a few more comments. Mridul, okay, is it possible to open if you market startup and click bank? Pulkit, I think I'll not be able to answer this question. Maybe you can DM it to me and we can talk about later, because the question is not relevant to pitching and funding or pitch decks. Your question is it possible to open affiliate marketing startup using ClickBank? Let's talk about it one on one. I think I'll be more than happy to answer this there. So okay, as I said, I have put in the Instagram link. Go and follow me there. Thank you so much for watching. Do give it a like, thumbs up, share, subscribe to my channel, spread a word. I believe and I hope, I'm sure that a lot of early stage guys will find it very, very beneficial, very, very very, very helpful. This was the 5th episode, and I'm so happy, and I want to keep on making more. So thank you so much for your support. Thank you so much for staying till the end, and have a great weekend. Have a great holiday, and enjoy your Saturday night. Thank you so much for tuning in. And this is Dilnawaz Khan signing off. Thank you so much for attending AMA with DNK on Saturday night. Good night. Have a great day. Bye bye. Take care.